All right, boys, what is up? Today I'm going to go over what a CISD is and how we use it in the markets to catch our trades and how we use it as confluences, right? So a CISD stands for change in state in or of delivery. It's honestly the same shit. It doesn't matter. Some people call it change in state of delivery. Some people call it change in state in delivery. Same is or of, same fucking word. Doesn't matter. It is going to be the beginning of a shift in market direction. So if we are bearish, we would probably look for a tap into a higher time frame PD rate and then a bearish CISD, and that is when we would enter. If we're bullish, we look for a bullish change in state and delivery because that is telling us the market is ready to push higher, right? So it is going to be the candle closure above or below the move in the opposing direction before a liquidity sweep. So if we are bearish, the liquidity sweep is going to be a sweep of buy side. What do we have? This high, what does price do? Sweeps it. What happens before we take out buy side? We have this previous move to downside right here, right? This candle. We get the candles closed. You want to mark out the candles closed, right? The previous move to the downside before a move to take out buy side, right? And that may sound complicated, but this is a visual representation, as simple as I can show you. Move to the downside, take out buy side liquidity resting in the market, and then you want a candle closure below the last body's close to the downside. In this scenario, we have this candle right here. The ones that are highlighted, these darker shaded candles are bearish candles, right? So as you can see here, we have a bearish candle to the downside. Price comes out, takes out more buy side liquidity. We get a sweep and we get a change in state in delivery when we close below this candle's body's closure, right? We like ignore the wicks. We ignore the fucking wicks. Don't even worry about the wicks. Only focus on the bodies. We close below the body, and that is when you would enter short. You either wait for a retrace into it or you just straight up trade when it is created. I like to enter when it's created. But if we do close very low, I would wait for a retrace. But if not, it provides a great opportunity to go short. So ideally, the way to trade is, let's say price taps into a 1 hour bearish fair value gap. This is a 1 hour fair value gap, right? Price taps into it. What is the last move to the downside before we took out sell side or buy side? This candle, right? Price comes, closes below it, CISD. It's really simple, guys. And it's harder to explain. So what I say, when I say it, it might sound complicated, but in reality, in practice, it is very simple to spot. A bullish CISD is just going to be the opposite. You want to tap into a higher time frame PD rate. And then you want to see price take out sell side liquidity and close up above the body's closure of the last move to the upside before we came and take out sell side. So what do we have? Sell side resting right here. Price comes, takes it out. What was the last move to the upside before the move to the downside? This candle. Where was the body's close? Right here. What do we do? Close above it. What does that give us? CISD. All right. And it might sound complicated when you first start spotting them, but your eyes will adjust to it, right? So CISD, short for change in state in or of delivery. Same shit. Doesn't work. Doesn't matter. I mean, beginning of a shift in market direction. I just wrote that down so you guys can understand that it is going to be our main confirmation in the model I teach. The way I trade, I love to use CISDs a lot. CISDs and IFEGs are my main, if not only, entry models that I will trade off, right? I will use other confluences to trade or to kind of like convince me to take the trade, but I won't base it off that strictly. Let's say we tap into an order block, I won't take that trade. I want to see price visibly give us a CISD or IFEG, and that is when I will only enter a trade, right? So bearish CISD, let's just say we tap into a higher time frame PD rate like this, 1 hour fair value gap, for example. Bearish fair value gap, we take out buy side and then we close below the last move to the downside. Change in state and delivery telling us price is ready to push lower. What do we do here? Create a bullish 1 hour fair value gap. We tap into it. What does price do? Give us a move to the upside. Then we take out all those lows, taking out sell side, and then we close above the body's closure, right? We do not care for the wick. The wick does not mean shit to us. Look up price here. Did not close below this wick, right? It closed below the body's closure, and that is enough of a move for us to enter in shorts. That is what classifies a change in state in delivery, all right? I'm going to show you guys some examples now of some trades I took this morning based off change in state and delivery, right? So we took some shorts this morning off a 15-minute 2 CISDs that you can see right here. And market is still dumping, right? So on the 15-minute time frame, we tapped into a bearish 15-minute fair value gap, right? Bearish 15-minute fair value gap, sell side resting below us. What do we see happen on the 1 minute right here? Watch how price taps into this bearish 5-minute fair value gap. We create a bearish 5-minute. Let me delete this, right? So this is also an example of everything I tell you guys coming together. So we inverse this bullish 4-hour fair value gap, telling us price is ready to push lower, right? On the 15-minute time frame, we create this bearish 15-minute fair value gap that price taps into and respects. Coming out of that 15-minute, we create a bearish 5-minute fair value gap. We tapped into that 5-minute. Now the top on lower, because I usually execute off the 1-minute time frame. What do we see here? Let's get rid of all these targets. Ignore these. All right. We see a move to the downside, bearish candle close to the downside. Then what do we see? A sweep of buy side liquidity inside a higher time frame PD array, and then a candle closure below this candle's low, right? So how would we draw this out? We draw it out from the last move. This is the last move to the downside before we take out sell side, right? We swept at this high as well. So sweep, right? Candles close. We close below the candles close. Bearish CISD. Now you can trade this two ways. The way I signaled it to the Discord today was when it was created, because price does not have to retrace into it, because it's already telling us that price is ready to go in the other given direction, which is bearish, right? And other ways you could trade it is obviously wait for a tap into it. And as you can see today, look how price reacted off it. Several members in the Discord today waited for a tap back into it. They got a way better RR. So benefits of waiting for a tap back into a CISD are better risk to reward, better confirmation, but you're less probable of getting the trade because it doesn't always have to retrace into it, right? Usually I will enter in when it is created, but if you get an entry when it's tapped into it, even better, because that's honestly a great trade, right? So take out buy side, candle closure below the last move to the downside, which was this red candle or black candle in my case, because my candle colors are white and black, right? But for you, they might be red and green. White is green, red is black, yeah. So red candle closure below the red candle's close to the downside before we move to take out buy side, right? So this is a live example. This is another example right here. We have a unfilled daily fair value gap resting below us, right? Ignore that. Unfilled daily fair value gap right there. What does price do? Taps into a bearish 3-minute fair value gap, right? Taps into a bearish 3-minute fair value, telling us price might want to push lower. What confirmation are we looking for? A candle closure below the last candle closure to the downside before a sweep of buy side, right? Red candle, sweep these highs inside a bearish fair value gap. What does price do here? Closes below the candle's body and not the wicks. Look at the wicks. Didn't even close below until it basically hit TP, right? This is how we catch early moves in the market, right? So candle's closure, price comes out, takes out sell side. We get a body closure below the previous candle's close, telling us price is ready to push lower. In this case, like I said, price is very close to the CISD, so I would wait for a pushback into it, right? Stops above the high, TP at the daily fair value gap. As you can see, it was extremely choppy, but it did hit. It was still a good setup, 3-minute fair value gap, 1-minute CISD, right? With a daily fair value gap below us. As you can see, price then gave us a nice reaction coming out of it. Until now, that price is pushing lower. But these are two live examples of bearish CISDs. There was one bullish CISD today that I can show you guys. Let me just clear. I don't want to remove all the drawings, so then it's going to remove what I showed you guys earlier. But if we see here, what do we do here? We take out sell side, right? We take out this sell side. This low is sell side. Take it out. What does the market give us? A move to the upside before a move. A move to the upside before a move that takes out sell side liquidity, right? We took out sell side and we get a move to the upside previously, right? Candles closure right here. The candle's closure to the upside was this candle. Candle closure. Bullish candle closure above the body that closed, not above the wick. We didn't close above the wick until literally like high of day, right? So we get a wick here. We don't care about that, right? We don't care about that. We care about this, the body, right? We got a candle closure here. This candle closes above this body. And then you can, like I said, trade this two ways. Wait for a confirmation for price to tap into it. This is CISD. Right? CISD. And I would never take this trade just because I was bearish. Like, as you can see, like price shit the bed. But if I were to be bullish, I would have taken this trade. This is a beautiful setup, right? We also had like London highs and a 4-hour unfilled resting above us. Or Asian highs and a 4-hour unfilled resting above us. So if I were to be bullish, this would have been the trade I would have taken today. Like I said, we trade CISD with bias. It is very important to trade with bias because a bullish CISD means nothing if the market is in a downtrend, right? Nothing means anything if you are in a downtrend and you see bullish confirmation. It does not mean shit, right? It is a good sign to exit your trade, yes, but it does not mean that price has to push up. It's just safe. It's a safe way to exit your trades, right? Fucking microplastics, bro. But this is a bullish CISD, right? Because we take out sell side and then we get a body closure above the last move to the upside before price came down and take out sell side. So we draw it out. The way you want to draw out CISDs, like I said, is from the body's close. For a bullish CISD, you draw it out from the closure of the last body's close to the upside before we take out sell side. So the last green candle you see before a series of down close candles, if you close above this candle's high, not the wick high, the body's closure. If you close above the body's closure, that is a change in delivery. I'm telling you, price is ready to be bullish, right? And we didn't care that price was telling us it's ready to be bullish because we were bearish. We literally tapped into a bearish 5-minute fair value gap and then, or 5-minute, I'm not sure if you can see it. Hold up. 5-minute and then create a 1-minute. That is why daily bias is so important, guys. The way price moves doesn't mean anything if you don't know where you want price to go, right? Because in theory, this looked like a beautiful setup, right? A 1-minute CISD to the upside after taking out all this sell side here, right? It looks like a great trade, right? We take out sell side, liquidity sweep, right? Candle closure above the last move to the upside before a down close series of candles, right? We get a tap back in, so we see price respect it. You enter long, you're gonna get stopped out, instantly stopped out, because the overall trend is bearish. You have to learn to trade with the trend. If not, what you're doing is basically useless. If you're trying to trade against a trend and catch these crazy reversals, you may succeed, but your win rate is going to be extremely low. And if you trade like that, by all means, go for it. If you're profitable that way, I'm happy for you. Congratulations, but it does not work for me, so I don't touch that shit, all right? So 1-minute CISD to the downside. I want you guys to go on your charts and kind of start practicing seeing them. If you want to go on today's day, if you're watching this now, today's March 26th, 2025, if you can see this, kind of chart this shit out. But yeah, your stops, when you trade CSDs, your stops would be above the highs and your take profits are going to be at your draws on liquidity. So it's either going to be a swing low or in this case, a daily fair value gap. I can make another video in the future about actual draws on liquidity, but for now, you guys just have to focus on spotting a CISD and how to enter off them. Don't worry about stop losses. Don't worry about take profits. I'm going to teach you that in the next few videos, right? And I think the next video is going to be how to use time frames because you guys are really going to have to understand that. But you guys kind of got an idea of how I use them today as well. But for now, just understand what a CISD and what a CISD is and how to spot them in the market. Because if you can't spot it, then it's fucking useless, right? So a bearish CISD is a candle closure below the previous move to the downside before we come and take out buy side, right? So down close candle and then a series of up closing candles. And we get a body closure below the last down closing candle in the leg. Bearish CISD. Bullish CISD is going to be the example I give you guys up here. Holy shit, market is dumping. Right? Candle closure above the not the wick. You see how it doesn't close above the wick? It doesn't close below the wick here either. It closes below and above the body of the last move before an opposing sell side sweep. or buy side sweep. So yeah, go onto your charts right now. Try to mark out as many CISDs as you can. Get your eyes to adjust to them, and you will just spot them effortlessly in the market. So good luck, and I'll see you boys in the next video. Peace out.